Hi, everybody. There's our theme song, folks. Loud and clear. There's our theme song. All right. Good to have you all here. All right. Good evening, ladies and gentlemen. I see a lot of people still rolling in here. That's the nice thing about this. You can actually see all these people coming around. And anyway, let me get kind of settled in here and see all these names, these wonderful familiar names, and a lot of new names here tonight, too. Wow, good to have you all here. So I am going to, oh my gosh, all these names. Cool, cool, cool. Okay, all right. Today is, let's get started here. Get started. Excuse me while I clear my throat. All right, here's the button. Here. And good evening, ladies and gentlemen. Welcome to DayTradeSPY.com's Week-In Review, Inner Circle, Tuesday night webinar, Introduction to Trading. We've combined them all in together, put them into a mixer, and see what comes out. We're going to churn out whatever comes out of this. So what we did here, normally this is a Sunday night webinar where we look at the weekend review and look at the week coming up. And it's also a bit of an introduction to trading session, bit of a primer on options. And also because Tuesday was a couple nights ago, it was still going around the Christmas, so we didn't have our Tuesday night normal session Tuesday. We brought that into Thursday, so it's all kind of mixed in here together, but it's going to be fun. And I never done it like this before. So anyway, my name is Hugh, going solo here tonight. All right, my good friend Aaron Stevens, he's off tonight. Just came back from vacation a couple days ago, 3, 4 days ago, and then of course well, not of course, but he did get sick, so we gave him the night off just to kind of recuperate a little bit here. Anyway, today is December the 28th. All right, this is our last session together here, um, as such for the year. So I'm gonna make it a good one. Anyway, all right, so let's get moving here. Please use the questions box for any questions or comments you might have. You'll find that little questions box icon on your Zoom dashboard. All right, just click on that. I am the only one that sees that, so go ahead and ask whatever questions you want. We'll certainly try and get to them. Don't want to get too technical, or like we're going to try and keep it somewhat general. But if you have any questions that'll probably concern a few other people, I'm sure we're going to get to them and we'll answer them. So, all right. So I have a couple questions for you before we get started. Excuse me here. I've been talking all day, so get a bit of a horsey throat. They told me not to eat too much hay, but anyway. Folks, here's a question. I want you to put in the questions box here. How familiar are you with options? I know there are a lot of new people online, a lot of new people who do not know what options are. Somehow you found your way here. Thank you for joining us. Please put in the questions box, trying to get an idea as to where to go with this session here tonight. Just press 1 if you have no idea, just discovered them. 2 if you don't know much, but you're interested. 3 if you're fairly knowledgeable. And 4 if you're totally understanding of options. Just want to get an idea for all of that. And then let's just take a look here. A lot of 3s and 4s. All right. A lot of 3, 2. There's a couple of 2s. No real ones here. Okay. Oh, there's a 1. There's another one. And mostly 2.5. I like this 2.5. Yeah. 3s. Okay. Gives you a good idea. All right. Cool. Cool, cool, cool. I was gonna say, and we'll see if you want to do this. I was gonna say, if you for those of you who are new to options, all right. So what we're gonna do is we're gonna split this segment up here. This is the session tonight. We're gonna have a regular sort of weekend review, inner circle webinar session first, and answer some questions and whatnot. And then anybody who wants to stay on after this session, we'll have a bit of a primer on what options are. If there's enough interest in that, we'll certainly get you in on that one too. So, okay. All right. Good to know that. All right. I think I got another question up on the board here for you. That question is, have you seen our introductory Sunday night webinars? Last Sunday, it was actually Thursday. Punch up yes, no, don't recall. What Sunday night webinars? Okay. I'm just trying to get an idea here. If you, for those of you who may be new here. Okay. Yes, no, good mix here. A good mix. Okay, a lot of new people here. I think a lot of people have seen this before. I don't want to bore you with with the information, but at the same time, for anybody who is new, I'm going to ask for your indulgence as we get into this. By the way, folks, if you are new to options and we get into the little technical jargon, don't worry if you don't understand what we're talking about. It'll come to you later. You're not missing a whole lot. Okay, lots of yeses here, some B's as well. Okay, cool. Good to have you here. All right, let's go on here. Let's go on, folks. All right, I gotta give you this disclaimer here. This is to keep the lawyers happy. I'm gonna just kind of keep this up here. Come on, get over here. Where is it? There it is, right there. Okay, for some reason, it doesn't want to hold. Let me go back to this section here again. There we go. I'll give you a half a second here to read this and understand that past performance does not guarantee future results. You alone are responsible for all your own trading. I think you understand that. All right, let's move on. Let's move on. You know how it works. Folks, I want you to meet your hosts this evening, although even though it's just me, myself. My name is Hugh, and I learned this stuff from in the trenches, all right, mired deep in the mud. I used to work for corporate America a long time ago, handed off a lot of my money to my financial advisor, and he blew most of it away, half of it anyway. That's when I realized it's not going to work. And of course, he tried to keep my account, but I said, well, at the current rate, I think it's going to go down. And in fact, before too long, I should be at zero. So zero times anything is zero. That I know. And I knew that was not going to work. Anyway, I seized control from my financial advisor, figured out I got to learn how to do this myself. I started with equities. I took a look at futures. I looked at Forex. I actually lost some money on Forex as well. I looked at options. I looked at all kinds of stuff, different companies, exchange traded funds. I looked at commodities, you name it. I probably looked at it. I did not trade crypto. I never traded crypto. I never traded, what's that other one? Non-fungible assets or whatever those things are called. Never got into any of that stuff. Just kind of stayed with the mainstream things and traded options, started trading options. And then I actually got pretty good at a little technique that I discovered for myself. And I started making some serious money. Obviously, I'm no longer working for corporate America, although that's not quite true. But I'll get into that a little bit later. But things worked out very well. I started bringing home, the toys, new cars, new house, new airplane, lots of vacations, that sort of stuff. And people started asking, Hugh, what are you doing? You're obviously onto something. Can I give you my numbers and you can pay my lottery, play my lottery for me? I said, no, I'm not doing lotteries. I don't gamble. I don't even buy any lottery tickets. To me, that's just a waste of money. But people started asking me, Hugh, can you show us how to trade options? And when they became serious, I became serious. I set up a website. Okay, here's I'm looking to trade. Anyway, that was 2010, 13 years ago, 13, almost 14 years ago. It'll be 14 years ago in a couple of days. Actually, it was in May. Coming up in May, it'll be 14 years. So we chugged along, did actually very well. We did very well, and a lot of people learned how to trade. And but most of what I teach, all right, is from that experience, a thing called experience. We celebrated the wins, of course, but it was those losers that I would always go back and see. Okay, what did I do wrong? Did I do something wrong? Did the market just turn on me? What could I have done better? What was I thinking? Why did I think yesterday this trade was great and today suddenly the same thing is no good? What changed? I kept going back in time and trying to figure this out, wondering what's going wrong. And I think a lot of people don't do that. And that's why they end up losing because they don't actually learn from their mistakes. I'm not saying I learned every time. Sometimes I had to learn that lesson many times before it would actually sink in. All right. I'm not as smart as you think. Okay. Uh, but I learned what really worked and what didn't work and kind of got good at both. And then, of course, when I stopped doing all those things that weren't working and just focused on those things that were working, suddenly my lot in life improved. And so anyway, last year, 2022, somehow we got the attention of Eagle Financial Publications. They said, "Oh, we like what you're doing." So they made us an offer we couldn't refuse. We sold out to them. Yes, we sold out. But one of the conditions that I stay on, And now I am able to focus on teaching you how to trade options instead of everything. We had to do everything. We're a small group. Before Eagle came along, we had to do everything, all the administration, the marketing. We had all the, we had people involved, but it does take a lot of time and effort and consuming of you to handle everything. But anyway, Eagle came in and they are phenomenal, and we love them, and everything is working much, much better. In fact, even better pricing on our products and improvement in every way, every which way. So, I am looking at short-term breakout trades. That's kind of what I do for small, multiple times a day type of thing, different strategies. Got several different really cool strategies that work. We only trade SPY. SPY, that is the stock that follows the top 500 stocks, that S&P 500. Since since discovering that, suddenly my workload decreased like you wouldn't believe, probably about 90%. Because before that, I used to have to, check all the different stocks and sectors and all this other crazy stuff that we had to look at to determine, well, where's the stock going to go? But now I get in front of the computer at about 8:30 in the morning, and very quickly I got a pretty good idea as to where the stock is going to go. And I just trade in that direction. I get in and I make a few bucks, get in, get out, have fun, and enjoy the rest of the day. But here's one of the things that Eagle did. They brought on Aaron Stevens. Aaron had a similar background as I did, but he started as a teenager. I started late in life. He started as a teenager and 18 years of age. He was looking at charts. He'd sneak down to the school library and pull out the Wall Street Journal and analyze stocks. Who does that? Guy's nuts. He's a self-described nerd. Great guy, let me tell you. Never underestimate the power of these guys. They're very intelligent, very smart. He was light years ahead of a lot of people in this regard. I mean, I think he's 40, 41 or something. But this is all he's done all his life. Now, here's the cool thing. Eagle, Eagle Financial got him away from as a technical analyst for $150 million commodity fund. That's what he was doing before he came to Eagle. So he came to Eagle, and he is in our trading room every morning. The two of us host the trading room, which is really pretty cool because he has his set of indicators and I have my set of indicators. So we have this saying that when our indicators unite, our trades ignite. In other words, if Aaron says the market's going to go up and I say the market's going to go up, you better be buying call options. So for those of you who don't know what a call option is, and it's an option, there are two names you have to know, calls and puts. If you expect the market to go up, you would buy a call option. If you expect it to go down, you buy a put option, call up, put down. And the way we trade, so we have a very unique way of trading. We do not get into spreads. We don't get into naked positions, none of that stuff. We simply buy first and then we sell. We buy calls and puts and then we sell calls and puts on one stock SPY. It's like, we're specialists. We're specialists. So let's say, I mean, this is why this is why the shoemaker makes the best shoes because he doesn't do anything else. He doesn't make purses. He doesn't make boots. He doesn't make belt buckles. He doesn't do that. He only makes shoes. All right. And I like to compare it as, to a specialist, right? If you have a toothache, you go to the dentist. You don't go to the oncologist or the gastroenterologist. They don't know anything about the teeth. Maybe they do. If they do, they do, but that's not what they specialize in. So they're just going to tell you, go see a dentist, right? And that's the one thing I really discovered in this whole world of options trading and stock trading is that there's so many things that you can do. And one of the reasons that a lot of people I find go wrong is that if something doesn't work for them in one, they right away jump onto something else and something else and something else. There's some people that all they do is they jump from one to another to another. They don't actually kind of sit down and think about, well, what really kind of fits my lifestyle, my goals, my everything, and find that one program and maybe tweak it if necessary. And if you happen to lose on a particular trade, doesn't mean, the whole thing, you throw what do they say? You throw the baby out with the bathwater, whatever the saying is. So anyway, But over the years, we discovered what really works well for us, and we became very specialized. And it's actually pretty amazing that as a specialist, how much money you can actually make and keep. Anyway, I'm going to move on here, folks, because I can talk about that for quite some time. But right now, what we're going to talk about here is tonight we're going to discuss what happened recently, and we're going to talk about the upcoming week. We're going to talk about the 2 to 10K challenge, your challenges. We're going to bring those up, answer your questions, and going to give you the options primer for anybody who is new to options and wants to stick around a little bit later on after, kind of give you a brief summary of what this is all about. All right, so here's a week in review. Actually, it's not even a whole week because it is Thursday. We're just going back to last, actually Monday. Monday was Christmas holiday, so obviously the market was closed. So actually starting here on Tuesday. Tuesday was a no or low news day. Not much action on the news front. Therefore, there was not a lot of fundamental type activity on Tuesday. Mostly technical trading as year-end institutions rebalance their funds. Retail managers push prices higher. Naturally, the prices gravitate to the upside. So we were seeing this push up a couple points on Tuesday. By the time Tuesday afternoon rolled around, we hit some very serious resistance, the highest resistance that we have seen in just about 2 years. And we've been testing this now for a while there. We're sort of expecting a half kind of a retracement, but never really came. Never really came. We were bouncing around a little bit, but we really held up at that level. Okay. Yesterday, Wednesday, was worse than expected. Richmond Manufacturing Index numbers wobbled SPY for most of the day, popping up through resistance, however, by the end of the day. So what happens is when these news items come out, excuse me, the pundits, the mainstream media get a hold of this news and they start bouncing it back and forth. Well, this is no good. The economy is going to go up or down or whatever they. So I mean, their job is to completely disassemble the news and make fodder out of this for the next few hours because they have to sell airtime, So and but the market was bouncing around pretty good there, mostly in that range, in that what 50-60 cent range, and then at the end of the day, we ran up here to 477.63. And then today we had pending home sales, unemployment claims that kept SPY pretty at a pretty lofty level, just over its pivot point, close to within 20 cents of its open by the time it closed. So it's kind of I don't want to say it was light trading, but it sort of gravitated to the upside as can be expected in a Santa Claus rally, which I believe we are in the middle of right now. So take a look at the seasonal charts. This here is a seasonal chart. That blue line is where SPY is now, and the red line is a composite of the last 5 years closing price on the daily charts. Okay, so you can see the average is way down here around 360, but we're up at 476.69 right now. Let's take a look and see as we focus right in on this. Historically, SPY remained flat from about a week ago, but seasonally, SPY rose, believe it or not, about 2 points in the last day of the year, which is going to be here tomorrow. The last trading day is going to be tomorrow. Okay. So something to keep in mind. We still may see a bullish trend here tomorrow. I'm not really sure what's going to happen, but we're going to see what lies ahead in the next few days. Tomorrow we've got a Chicago PMI report. Markets, of course, closed on Monday. By the way, tomorrow is going to be a full trading day. All right. Unlike last week where the markets closed for Christmas Eve at I think it was about 1 o'clock in the afternoon when they closed. On Tuesday, there's no significant news to be released. Wednesday, however, we've got manufacturing PMI report, JOLTS job openings, and the FOMC meeting minutes are going to be released. Thursday is going to be non-farm employment change, unemployment claims, services PMI, and crude oil inventories. And on Friday, we have an Institute for Supply Management Services PMI report. and there are going to be some employment numbers, unemployment rate. These are going to be issued here on Friday. So the way we figure here, volume may be light in the next little while, but watch for elevated volatility tomorrow, and then it should drop on Tuesday, right? Monday being New Year's. We'll see what happens. Wednesday into the end of the week, I think you're going to see volatility picking up a little bit here. So what I would do here is trade small, trade often, watch for possible sudden drops off major resistance levels because we are testing those levels right now. We haven't for the last several weeks. And it has not been an easy run sometimes because you find yourself in that precarious position when you're up at this lofty level of resistance that we haven't seen in about 2 years. Folks, got to tell you, there are many opportunities all day. I had the pleasure of talking to somebody a couple of days ago about this very thing. He said, I somehow miss all these moves. I said, if you miss a move, don't worry about it. Because one of the beautiful things about the economy and the stock market is that it provides you opportunities all the time, many opportunities during the day. And then when I went back to show them on the charts and showed them the indicators we use, I said, look at this. When this crossed over there, and if you bought in here, you're watching it. You can see it happening. There's no secret. Every time this event unfolds on the stock market with this particular indicator, you have this opportunity to make some money. And when I showed, I said, I can't believe it. How do I miss these? How do I miss these? Well, we show you these. He wasn't a subscriber yet. I'm pretty confident he subscribed to the trade room since then. But anyway, folks, we show you how to spot these opportunities and how to trade them. And by the way, not all setups should be traded. All right. There are some setups that you should hold back and say, not a good idea. Just as an example, let's say we have a setup going into the upside, but we have that major resistance level we're talking about. Well, be careful because if you don't have that runway, all right, so this is a term I coined. What I mean by runway is the room to grow into. All right, as a pilot, we like to land on runways. It's so nice to do that. But you have to make sure that the runway is actually clear. You don't want any, runway incursions. You don't want another plane on the runway because you can hit it, right? Or maybe a snowplow, or you don't want to, or if you're seeing in a farmer's field, we like to, land on Saturday mornings, go and breakfast at some farmer's field. Well, you want to make sure there are no coyotes or foxes on the runway. It could be very messy if you were to run one over. So we do these low and slow, passes to make sure. And if there is any animal, deer or whatever on a runway, you want to scare it off. You want it to get out of the way. And then you come back and you land again. So when I say runway, I want room to grow into. You don't want to get into a setup. Oh, there's a good setup. Well, you need the setup, but you also need the stock to be able to move so that your option can come up in value and give you that profit that you're looking for. There's only maybe say 5 cents or 6, 7 cents for that stock to grow into before it hits a major resistance level. It's not going to give you any room on your option to grow into, right? You might find yourself holding the bag with a bad trade. So anyway, we talk about all these things. We show you how to spot these trades, how to find them, how to trade them. That's what we do. We do this every day. That's what we do. All right, so let's get on to the 2 to 10K challenge. The 2 to 10K challenge. I talked about this the other day last week. I didn't really analyze too much. I don't think I gave you much of an analysis, but this is the second time we had done this. The first time was April to July, and the second time was September the 25th to December the 25th, but we actually finished a couple days in advance. The interesting thing about this, it was not a straight line. That red line here is the budget where we're supposed to be along the way, and the blue line, of course, is the actual. So you can see how there are a couple times in there when we took a bit of a loss, right? First time we recovered pretty nicely. The second time was around Thanksgiving. In fact, there were two losses, one on either side of Thanksgiving, and I took a hit on both of those days, and so we kind of came down right around then. But we're able to recover pretty good and came out with a nice little profit. I don't have the numbers. Maybe I should bring up the numbers. Let's see. Do I have the numbers? I don't want to. If anybody's seen this before, I don't want to kind of bore you with it, but I do want to kind of show you what we had done. We put all these things on spreadsheets so that you can actually see and we track these things so that here it is right here. This is this the one? Let me just see. Hang on a second. Just want to make sure I get the right one here. Yeah, this is the one. Okay, here we go. All right, so I mean, I kind of go back to the beginning, starting with $2,000, turning 2,000 into $10,000 in 3 months. We hit our mark in advance. It's supposed to be December the 25th. Obviously, the markets are closed, but maybe the 24th or 22nd or whatever. But we came in at the 21st, couple days in advance. We hit our target, $10,269, and we did very well. So I wanted to show you the stats on this. We have 64 trades that we had done, 6 days of no trading. So there's 6 days where we actually did not even trade for whatever reason. Maybe I wasn't around. Maybe, I just didn't feel like it. Or, there could be many days, many reasons. We had 5 days of losses. And even with that, we're able to get this baby back up and came out with a nice little profit, right on schedule, even ahead of our schedule, ahead of ourselves. All right, so people are asking already, when is the next version coming out? I'm thinking here, and we've been talking about this, likely to start late in January. Okay. Excuse me while I have a drink of water here. So we're talking about late January, starting this back up again for version number 3. There'll be plenty of promotion going out around this, so watch for your emails and get in on this. Seriously. All right, we do this in the trading room. You have to be in the trading room to witness this program. That's where we do it. There's no surprise. Everybody saw this. It was all witnessed. All those trades that I showed you on that spreadsheet, they were all witnessed firsthand by all those people in the trading room. So none of this was cooked in any way. Nothing like that at all. I don't ever want anybody to think that. We're totally transparent. Everything there was right before a live audience. And a lot of people made some very serious money in this 2 to 10K challenge. I've had some people say, you know what, I've never done this before like this, but your spreadsheet and your analysis of the market and your explanations and everything kept me very much on track. And I can't thank you enough for, I never thought I could take 2,000, turn it into $10,000 in 3 months. If you'd have told me that a couple months ago, I would have thought this is absurd. You're lying, you're delusional. But not the case at all, folks. And we did this. So now we are going to be probably releasing the version 3 in January. We will be, but it'll probably be in January. But do watch for your watch for your email for details on that. And again, you have to be in the trading room to take advantage of this. Okay. So, all right, fireside chat. This is something we do on our Sunday night sessions because I kind of enjoy sitting by the fire, right? And if you have any questions, let's bring them up. All right, we're not bringing you in front of the microphone. That's not it at all, but I want to kind of go over the questions here in the questions box. And all right, Eric, good question here. Excuse me. I guess this stems from the fact that many services out there might just have one thing that they do, which is awesome. And we started with one thing, but then we grew. We grew into training. We grew into, started with the inner circle, and people wanted, well, can you tell us what to trade? Then we turned into the pick of the day, and then anyway, things evolved. So here's the question: what is the difference between everything? So the inner circle. This is the first thing we had done. This is like a flash assessment. Every morning we send you an email at about 9 o'clock, a little after 9 o'clock, the way we see the market unfold for the day. Fact is, we're just not that smart to tell you where the market's going to be a year from now, a month from now, or even a week from now. Markets change all the time. I don't know where it's going to be. I could tell you one thing is going to be totally different. And I certainly don't want you banking money on information like that if I don't know where it's going to be. But I'll tell you, we have a very good idea as to where it's going to go today. All right. And we can tell you with a fair degree of confidence where we see the market unfold today. And that's what the inner circle does. We give you a flash assessment every morning. We send out a very brief email. We're going to get into that in a little bit. And then later we send you a follow-up report as to what we actually did. And of course, every Tuesday night we have our meetups. except this last Tuesday, which is now today. And that's what we do. It also opens the pipeline for any quick questions you might have. That's the inner circle. Costs next to nothing. Next question on this one. Well, what is the pick of the day? So people wanted to have a pick. So usually right around 9:15, we send out an email that identifies what is that option pick that we are interested in. And this is to be purchased right at market open with an immediate sell order for a 6% gain. Good till canceled, walk away, come back later. Market usually gives you a profit right there. Once in a while, you may have to hold overnight. Not a big deal. We explain how to, we have facilities. Let's put it this way: we have workshops. We have different things in explaining how to manage those kinds of positions. That is the pick of the day. Now we got into the signal, exchange traded signal, DayTradeSPY exchange signal, and that is a little bit different. Similar to pick of the day, but the signal can trigger 3 to 5 times a week, and that's based on an algorithm that occurs during the day. So unlike the pick where you get the morning pick right at before the opening bell, the signal comes during the market hours. It is emailed to you and is also sent to you through your cell phone as a chat. And the idea here is immediately when you get it, if you're driving, pull over to the side of the road, pull up your app, make the trade, put up for sale right away for a 5% gain. If it doesn't fill by the end of the day, you sell it at the end of the day, whatever the market will give you. It has been working extremely well. And what else do we have? I think that's the big question. So, question is, what is the best and which one is entry level cost? I would say if you're just entry level, inner circle is probably a good start. If you are already familiar with options, then I'm going to bump you into the trading room. That's really where the rubber meets the road. Okay, that's really where it's all about. And it's an excellent place to be. So we not only teach you this, but we interact with you. You interact through the questions box, and any particular questions you might have, we answer them. Two professional traders with over 40 years total market participation, Aaron and myself. All right, Sunday night, I'm getting ready for work. Sorry to hear that, Rod. By the way, these Sunday night sessions, just like this, are recorded. They'll be available on the website at some point fairly soon, usually within a day or so. Do the program only about a week. David V, good to have you here. What happened with puts yesterday? I think we're still in those puts. It's not the end of the world yet. Don't worry so much about it. We'll see what happens tomorrow. There's some news coming out tomorrow, but that just might be enough to knock it back down here. So, all right. Okay, Phil, change to 3 entire. Okay. All right. Okay. Eric's saying here, for example, I cannot attend the morning trade room, so I don't know which of your services to use. Inner Circle gives you the way we see the market as a flash assessment. The trading room is a real-time, real market environment program. And again, like you say, we have the picks. All right, Michael M. Love it. SPY. Do you trade more than once per day if the setup presents itself? I trade SPY usually within the first 15 to 20 minutes of open. Good to hear. We have several strategies. They can present themselves several times a day. I like to get all my trading down in the morning, so I have the afternoons to myself, and I like to get in and get out and enjoy the rest of the day. So, all right, Binny, I hope I pronounced it. Benoit. Okay, I'm subscribed to the pick of the day. Struggling to figure out ideal stop loss for trades that don't take the 6% profits. Trying to find balance between letting trade work, breathe, but not getting rugged, experiencing big drawdowns. We don't use stops for those, Benoit. Not that we don't manage those positions, but I find stops is really not the way to go with options on SPY. You'll get stopped out way more than you want to be, and oftentimes you have to just let the market go down before it comes back up. Statistically, it works extremely well. All right. Jeff is saying today's pick and the OMG did not trigger. That is correct. They did not hit their target sell prices. We'll see what happens tomorrow. SPY didn't move much all day. I think it moved about 60 cents or something. It's pretty crazy. Is this the normal course experience? Any conclusions? Those are details we're going to get into in the trading room. Those specific trades. Okay. there's a lot of normalcy when the stock runs up the way it did in the last few days. I think we ran up about what, six, seven, eight, $9 or something. And it's very normal to see a certain level where it's just going to trade in a range bound, very tight range bound for a little while before it makes its next move. Okay. Troy, just kind of quickly reading your questions here. Okay, I like this here. It's just started the pick of the day service. Pick of the day. Pretty experienced using other options picking service, but love the concept of just focusing on SPY and getting in and out. Congratulations, Troy. Cleared 1,000 on Tuesday, 1,500 yesterday. A little bit tough today. Can't wait to back test once that is available. Jumped in with 125 contracts. Troy, you're getting in there pretty deep, pretty deep. Got pretty scary. Ended up selling about $1,800. No, 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 no. You shouldn't have sold. I bought at $3, ending up selling at 285. If I'd about lower, probably would have closed with my 6% gain. Still need help figuring this out. Folks, I am going to pause this for about 10 seconds, and I'll tell you why in a second. Just stay right there. Don't go anywhere. Okay, sorry about that. So I have this big, beautiful Bernese Mountain Dog, the love of my life. She's only supposed to live to about 8 years of age, but we're in year number 12 right now, and she was scratching at the door, and she was going to drive us crazy if I didn't let her in. So now you know who runs the house around here. Okay, my dog. But Lucy, we love her very much, and she likes to sit here beside me and listen to this webinar. I think she's going to become a pretty good trader hopefully soon. Anyway, getting back to your question here, Troy, if I had a little piece of advice, actually lots of advice, I hope you join us in the trading room because that's where we teach a lot of this stuff. Money management is very key and picking, trading the options. There are never any guarantees to anything in the market. I think you understand that, you know that, but I think maybe at the beginning going in for 125 contracts might be a little bit rich unless you've got a lot of money behind you. You don't mind. Rule of the thumb is never invest more than you can afford to lose, no matter what. There is never, and there never will be, any program out there that is going to be 100% all the time. If anybody ever tells you they never lose, they are lying to you. Okay, they are lying to you. All traders lose from time to time. So it's a question of how do you control that? How do you manage that whole thing? And we've got a lot of this figured out very well. Um, and uh, and I don't take losses easily. So I think we should probably talk and get you in the trading room because that's really where we address a lot of these concerns. I don't like to see losses. Um, so anyway, but I hope to see you in the trading room. Please let me know if you do join in. I think you're going to learn a lot there. So, all right, Mark V. Oh, good to have you, Mark. Mark's been with us a long time. When will you start the 2 to 10,000 in January? I don't have a date yet set on that. We are going to be talking to our marketing people on that. I believe probably, I'm not sure, Tuesday, probably if they're going to be in or out. I'm not sure. Hopefully Tuesday. We'll see. All right, what else? So what's the time frame for the 10K goal? 90 days. 3 months, 2 to 10K and 90 days. All right, lots of questions here. All right, I was looking for 2 to 10K per month. Might not be for me. Michael, they could be. All right, a lot of people are doing much better than that. Okay, so the 2 to 10K in 3 months, that's a very sort of a, if I can use this term, safe way of doing it. It's very doable, especially for the novices. If you want to get aggressive, absolutely you can. And I've had some people come in like way over 10K in a lot shorter period. So I mean, this is just a sort of little project just to kind of get people's feet wet. Okay. All right. So, and yes, Lawrence, we are going to be going back to Sunday evening after the first of the year. I thought that just to not break up the momentum for these 2 weeks, that we're just going to move these 2 weeks to Thursday. We are going to be back to Sunday night, kind of a nice, relaxing night to just sit and talk to everybody here. So, We're going to go into that. All right. Was today a bad day for the signal? It wasn't a bad day. So the signal is now the signal is another program we have which works off an algorithm. When the algorithm kicks in, then you are notified. And the idea there is to get in right away within the first 2 minutes and immediately put up for sale for 5% gain. If you do not get your 5% during the day, sell it at the end of the day for whatever the market will give you. Free up your capital. All right. Again, statistically, this has been proven to be extremely, a good program. Once in a while, you are going to get the situation where it's just not going to give you that, and you do have to take a small loss. If you buy the right option that we tell you to buy, you should not have, it should never go to zero because there's always going to be this time that you're going to buy. So, but today, could have been a loser if you did not get in at the right times on that one here. So, all right, question: do you trade 9:30 to 4 p.m. Eastern time? We're part of that. Our trading room is every morning 9:20 to 10:30, a little over an hour. That's all it is. A little over. We don't sit in front of a computer all day, every day. I don't want this to become a job. Oh, the idea of a job. No. What? Me work? Who was it that? Maynard, what's that guy name's remember that TV show Dobie Gillis? Anybody remember Dobie Gillis? What? Me work? Ah, it was a bad letter. It was a bad word, four-letter word. Work? I'm just kidding about that. Actually, we do a lot of work and we do a lot of one-on-ones with people. We do a lot of writing. We do a lot of different things, but we do not want to sit in front of a computer and trade all day. My idea here is to make the money in the morning and then go enjoy the rest of the day. Question from David is the pick of the day for a week. How do I get in trading room? Why didn't put this work yesterday? Should we set up a stop loss? Again, we kind of beat that to death. No, again, okay, so the pick of the day, all right, this you can hold this overnight. The pick of the day is designed to be held overnight if you need to. And we do show ways to repair the trade if need be, or to determine if it's going to organically come back on its own, or as a last resort, you dump it. That's the last resort. So we discussed this in the trading room. The signal, again, when you get the signal, immediately buy it, put up for sale for 5%. If you don't get your 5%, sell it at the end of the day for whatever the market will give you. That's kind of the way that one works. All right, question. How are you able to remain so calm? I love this from Bruce. How are you able to remain so calm when a trade goes against you? I guess, Bruce, I've been doing this long enough. I know the nuances of the market. I can see the noise on the 1 minute chart and even the 5 minute chart. And the answer is really, pull out, zoom out if you want, zoom out of the out of your option out of the screen and see the bigger picture. And you'll say, oh, wait a second, it's coming down now, but that doesn't mean it's going to stay down. It doesn't mean it's going to go down a lot. It's not going to, markets have an incredible memory for support and resistance. They've got a poor memory for news. So usually it's a news item that's going to move the market up or down, right? And that news is going to wash out pretty quick. Good news just as much as bad news. It's not going to hold forever. So you have to just wait it out. I don't know if any of you have been ever sailing and a little storm comes up out of the blue and you got your sail. Oh, now what do we do? Well, just drop your anchor, drop the sails. You're going to bob up and down, right? Just try to keep the sail to the upside, the keel to the in the water, and you should be all right. It's going to be a little bouncy, but if you can do that, the storm will pass. And that's the way I look at the stock market too. So when I see the market turning against me, I think of it as just a bass storm coming through. Just hold on, grab your arm, chair arms, and just kind of hold on for the ride. Go do something else. Come back later, and you'll find that a lot of your worries were really for no real good reason. You'll be fine. So, all right, okay. There's a lot of questions. I'm gonna try and skip over some of these guys here just so we can get moving on here. All right. A lot of questions concerning the signal and DayTradeSPY. You say wait till the SPY is moving in our direction. Okay, so this is a question for the pick. And by the way, if you are new to the pick or the signal, and if you haven't seen the video, please contact customer support and ask them to send you or direct you to the video that we have on how to trade it. And I think I'm going to leave it at that part of that because these questions keep coming up. There is a video. Each has a video as to the best way to trade it and the differences and all the rest of it. So when we say first few minutes, we say mean 2 minutes. All right. First, we mean get in the first 2 minutes. All right. Um, how much of a price move in our direction do you look for before entering? Is 5% move of the option price sufficient? I don't know what you're asking here, Bruce. Okay, for example, the pick of the day, that is the option that you're supposed to buy at the market open. Now, if the stock is going against you, wait until it turns back around on the 1 minute chart. You'll see, let's say you have some calls. There was a call option, but the market opens, you see a red candle forming. Wait till the red turns green, then get in. You'll get in for a cheaper price. If it's going in your direction, all right, get in at that time. Don't wait. What are you waiting for? Jump in. Wait, though, for a few seconds until the bid-ask spread settle in nice and tight. You don't want a big spread between the bid and the ask because that's not where the price is. You're going to get ripped off. Wait until a few seconds. You'll get the bid and ask nice and tight within 2-3 cents of each other. That is the price. Now, I'm going to give you another little hint here. And this will probably save you a lot of money, a lot of grief. So when an option is moving, it's moving up and you're chasing it, right? Let's say it's $2.50. You put your, the ask price, you put it up for 250. It doesn't get, you look at it against 255. You go back, you change your ask to 255. Next, it's 260. You change it to 260, and then it goes to 265. You change it to 265, then you get taken out. Right? You bought for 265. It comes back down and gives it to you. Think about that. You're chasing it up. And when you finally get it, when do you get it? You get it when the stock is coming back down. You're going up, the stock's coming down, it's taking you up. That's not when you want it. You want it going in and going up. So if you want to grab it while it's going up, which is what you want to do, here's the tip. If the ask price is, say, 250, put it in the buy for 257 or 256 or 258. Now, you might feel that's counterintuitive. I'm trying to get a better price. You're telling me to offer more for it? Yeah, because it's going up. By the time your order gets on there, it could be higher. But if you put in for 2 or 3 cents higher than the ask at that moment, and get in there, be fast, get in there fast, then you're getting to the front of the line, and you'll probably get taken out. Always use a limit order. Never use a market order. All right. And when you get it, now you got it, right? And now you're moving up with it. And so many times you can get your 6% like in a matter of a few seconds. So as soon as you get, let's say you pay 260 for it, multiply the 260 by 1.06, immediately put it up for sale for say 276, and probably in about 10 seconds, it'll ring again that you just sold. How as cool is that? Making your 6% within a couple of minutes of the market open. Anyway. All right. Okay. Yes. Buy when the bid ask spread get nice and close together. Buy. All right. We always Friday expiration. Always Friday expiration. How do you sign up for the trading room? I will show you that in a second. Actually, I'll show you that in a couple of minutes. Okay. Let's get on to some more questions here. This is what we do in the inner circle every Tuesday night. We give you the what we put out there in the morning here. Aaron actually wrote this up here, talking about SPY being near that 477 level as traders and investors are weighing in key economic data this morning. We had unemployment claims coming in, pending home sales 10. And so you see, talks about what we're looking at here. Near all-time highs around 477. Look for a quick trade and trade nimbly. Trade quick and nimble. Some signs of market sell-off. People want to take profits before the end of the year. So watch for that. And here's what we actually did do. SPY did run up almost 10 points in the last several days, so decided to take a breather today. Traded in a narrow 70-cent range for most of the day, and we hit the highs not seen since January the 5th, 2022, almost 2 years ago. Quite normal, as SPY may simply be preparing for another rally to wrap up the year tomorrow. Santa rally often lasts into the first week of January, so it might still see some growth. And then, of course, I put in what we actually did trade. Pick of the day, and OMG, which is short for out of the morning gate. I got those two, and I'm still holding them, folks. So you're not the only ones if you're holding them. I'm still holding those guys, okay? So we're going to see what happens tomorrow. All right, got some questions here from the inbox. Just want to kind of go over these real quick here. Does it pay to trade on the last day of the year since it is a short day and volume may be low? Whoever asked this question, first of all, it is not a short day. It's going to be a regular trading day tomorrow. Volume may be low, yes, but there's still going to be movement. So as long as those indicators show up the way we want for the setup, and as long as we have movement in the market, and as long as you're not trading $1 million per trade, and that way you don't want to kind of be the market maker on that one. But yeah, I think there's no reason to trade tomorrow. I think it's going to be good. But I'll tell you one thing: I do not want to hold overnight tomorrow because we're in for a long weekend, right? We're going to be in for a long weekend, and I don't want to lose 3 days of theta loss. So I will ensure that no matter what, I will be out of my trades tomorrow. Okay. Next question. Next question here. All right. Does the Santa rally follow into the first few days of the new year? Traditionally, the answer is yes. The Santa rally does traditionally go into the early part of January. Okay. What are your thoughts on holding overnight versus selling for a loss? I generally don't like to hold overnight. Doesn't mean I never do. Sometimes I will look at the overall picture. I'll look at the fundamentals. In this case, for example, we determined that earlier on that the seasonals still show a push to the upside the last day of trading in the year. That's all very good. And I think if I was to hold overnight in some calls, I'd probably stay with it. I'd probably stay with it. Now, admittedly, we are up at a nice resistance level, so it could be a little touch and go, but I probably wouldn't be bothered to hold overnight tonight into tomorrow. But as I mentioned, I probably will be out of my positions tomorrow afternoon because we have just too much theta loss. Theta is that time value. You don't want that. Uh, I may have to even look at it later. If I still see a lot of potential, and I might take the risk, depends how heavy I'm into it, but I'd rather not. All right. Do you have any stats on the pick of the day out of the morning gate and the signal service? Interestingly enough, I do. We did compile some pretty good stats on this very quickly. These are unofficial quick results. Okay. And what we did there out of the morning gate as a nine, so what we did there was we took all the picks from last Christmas to now. So we have pretty well a year, maybe a little more. We have overall 94.5% success on the out of the morning gate trades. The pick of the day is similar to that, 94.7%. And the day trade signal is coming in at 93.3, which we started just at the end of November. So we don't have that much data. These are the real trades. All right. When we did the testing for the signal, we came in around 96. But this, since we started this I think it was at the end of November, sometime in there, we're currently enjoying a 93.3% on that. But I would say that 94, 95% on these other guys, that's not bad. There was a period there in the summer when we're kind of struggling with a couple of these trades, and we did have some losers in the summer. Summer's a little finicky, your volatility goes down or up, or I don't know, there's some changes in there, and things aren't always as predictable in the summer as they are in the winter. So those are unofficial quick results. I'm sure the guys at Eagle are going to be getting into a deeper dive into those stats, and I'm sure they're going to come up with the numbers, a little more accurate numbers, whatever it is. Another question here: did you take any real trades lately? I know you told your doctor you're not going to, so don't raise your blood pressure. All right, so for those of you who don't know, I got a bit of a blood pressure problem, and a couple months ago, I was, we're talking about it and kind of had to promise my doctor I'm not going to trade, because he doesn't want me to raise my blood pressure. It's okay, fine. I said to him, I will try not to trade. I don't think I actually promised him. But so every now and then I still place a couple of trades. Here's what I did today. This is real. This comes from Tasty Trade. I did 2 trades. These are real. I don't even consider these trades. These are nothing trades. Overall, I was in there for what, about $5,500 or something. Trade number 1 took it from 271 to 288, 16 cents. Trade number 2 was a scalp for 6 cents, 284 to 290. I was in there longer than I was hoping to, but I still walked out of there with $230 profit for the day on, what was that, $5,500 or something. What is that? Something like 4.2%. Again, these were just nothing kind of trades, all right? Nothing kind of trades. So that's what I did here today. That's in real money. All right, another quick question here. Can you explain? Somebody's asking these questions here. Can you explain the buy to open, sell to open, buy to close? I'm confused. Okay, so I don't know if this gentleman is on here tonight. I hope so. So when you trade an option, and this is very elementary here, when you trade an option, you actually have four choices, four buttons that you can push. One is buy to open, so you're opening the position. All right, the position, and that could be, in our case, straightforward call or put. We are buying it. If you are doing, say, a spread, you could be opening a call on this side and a put on that side, or or maybe you're opening, I don't know what you're opening, opening you're selling calls or something, I don't know, whatever. But always buy to open. You're always going to be buying to open, and you're always going to be selling to close. That's the way we do it. This way, we're not going to be subject to ultra high risk. I mean, there's going to be risk, but I want you to only be able to risk what you put into the trade. If you get into a bad trade, a bad position, let's say you hit the sell to open. You hit the sell to open button and you have enough equity in your account. The system doesn't know that you made a mistake, if that's in fact what it is. So you could put yourself in a very precarious position. Let's say a naked put. Let's say you sell a naked put. Well, you're going to make money on a put as long as the stock market remains flat or goes up. But that doesn't always happen. Sometimes the stock market goes down. If the stock market goes down, the value of your puts goes up, and people might want to cash out or whatever. And if you don't have the equity to back up the value of the puts, you could get a margin call. You get a margin call if you don't come up with the money for the margin call, whatever that is. you know, they're gonna liquidate your account and you're done. You don't want that. And you also don't want buy to close. Okay, so you're not gonna have a position that's open. So sell to open, buy to close. Those two go hand in hand. Stay away from those. Let me see if there's something I can insert here to make sure that you do not entertain those two those two things here. You're not going to sell to close. Okay, these guys here, we want to outline. Let's go wait. Okay. We want to make sure that we do not, yeah, let's just sell it. Oh, there you go. I got it. Okay. So you only want to buy to open and sell to close. Ignore everything else. There might be other things too, like sell to close, covered or something. Ignore it. Okay. Buy to open, sell to close. That's all you need to do. All right. Next question here. Are you a Buffalo Bills fan? Do you think they have a chance at the playoffs? I used to watch football more so back in the day when O.J. Simpson used to play for the Bills, but ever since he did not kill Nicole Simpson, I stopped watching it. I think they're in second place now, aren't they, or something? And if my understanding is that what is it? Who do they have to beat? I think if they beat the Patriots, their chance of getting into first place goes up quite a bit. According to New York Times, I think they've got an 89% chance if for the Bills to make the postseason. If they if actually it goes up to 97% if the Bills beat the Patriots, but it drops to 45% if the Bills lose to the Patriots in the next game. So I don't know. I kind of get excited later on when they get into the playoffs, but that's the thing with the Bills. They hit a certain spot, and then that's the end of it. They're never going to walk away with the big prize, but maybe they'll surprise us. Anyway, let's move on, folks. I want to tell you about the trading room. I had some questions about the trading room. How do I get it? I'm going to tell you a little bit about the trading room. For those of you who have never heard of the trading room, or those of you who are just kind of pondering whether I should do this or not, the trading was actually pretty exciting. It is moderated by yours truly, Humble Hugh, call myself, that's what people call me, and Aaron, the amazing Aaron. This guy's very good. We moderate this every morning. Our strategies come alive 9:20 to 10:30 Eastern time every morning. Okay. Learn and earn. Okay. And they're interactive, just like this. You can put in your comments in the questions box. We answer them. It's exciting and it's fun. It's exciting trading. This is what we do. And I gotta tell you, I've been trading for many years and I'm still just as excited to trade now as I ever was. I guess it's the adrenaline rush or something keeps you going, right? But it's actually pretty cool. We teach what we trade what we teach, and you can watch us make some real trades, real accounts, real setups using real money. Again, if you have any questions, you get them answered in real time. And we have the longest that we know of, the longest running trading room. We've been doing this since 2010. So we're in our 14th year running this trading room every morning. There we are, there we are, there we are. And it's funny, I remember, it must be about 6, 7 months ago, we pulled up some really old, like some of the early videos, recordings of us doing the trading room, and oh my gosh, I can't believe how green we were with everything and the presentations and the trading and I think in hindsight, most people probably stayed with us because of the entertainment value of laughing at us. It was pretty good. Folks, the trading room. Um, can you afford not to subscribe? I mean, you know how easy it is to lose $700 on the stock market. It's a false economy to think that this is something you should endeavor to do on your own. When you have the opportunity to have two professional coaches, mentors in your back pocket, you know, and there to help you along, maybe to instill some confidence or you know, or make some better decisions, or maybe to say, well, wait a second, did you consider this? Did you consider that? You know how many traders I talk to that say, well, they lose money and it's because they neglected a certain key indicator that maybe they should have been looking at, or maybe they saw a news item that they didn't realize was going to have the impact that it did. But we teach you all that stuff. And the cost is only $6.99 for 3 months, billed quarterly. And you can I mean I think you can cancel with the first 30 days if you don't like it. How cool is that? So you're going to learn a lot. You're going to develop your confidence and your consistency. I think that successful trading is both have to be confident, disciplined, and consistent. You have to be consistent on the market. Otherwise, you're going to blow up your accounts, right? So I would recommend jumping into this. If you're not in already, you got to get this. You got to get this. Okay. Let's get back to some more questions real quick here because I don't want to keep you on all night. I know that some of you have been very patient with things and stuff, so I just want to make sure I do get a lot of the questions answered here. Right. Okay. What do we tomorrow? What do we do tomorrow with losing SPY trade? If we're in a trade, do we sell it at 20% loss, use the proceeds to enter a new trade? Um, I like to personally, I like to not hold overnight, even if I have a loss, because it frees up my capital to be able to trade the next day. But don't go jumping the gun yet because I believe tomorrow, let's take a look and see what news we have tomorrow. So, tomorrow, I believe we have a Chicago PMI report. Is that coming out tomorrow? That is Friday. Yes, we have a Chicago PMI report at 9:45. So I would not do anything until at least 9:45. And if you are in the trading room, we will discuss what I would do, what Aaron would do if we held some losing positions on our trades, and what we would do and why we would do them. We'll also talk about money management techniques at that time as well. Because even if you are in a loss, you should never be in a loss that is going to completely destroy you. Okay? Money management, no matter how good a program is. All right, you still stand to lose some money every now and then on these things. All right. Yes, Michael is the pick of the day, also just SPY. That's all we trade, SPY, nothing else. All SPY all the time. Howard, you cannot hear me. Turn up your speakers. Is the trading room the inner circle? No, these are two completely different subscriptions. The inner circle is an email that goes out to you, along with a follow-up email report and an invite to the Tuesday night meetups. The trading room is a completely separate thing where we get together every morning, 9:20 to 10:30. real time, real market environment. Okay, so all right. Does the pick of the day include info from the inner circle? No. They're all separate. Michael, yes, I'm excited to join you. Thanks for that, Michael. Dolby Gillis, I love that here. Does the trading room show the tools to new members? Yes. Okay, in the trading room, all right, yes, we show our screens, we show our charts, we show all the tools we use. No stone is left unturned. There's no secrets. We don't hold anything back. There's nothing to be gained by withholding really good tools, techniques, whatever in the trading room. A couple of days ago, I even talked about the 10 rules I have for trading. What was it? Can't remember what it was, but threw some rules out there, and people loved it. They took a screenshot of it, and I mean, it's all good stuff. We always have good information to talk about. It's also very entertaining, and so here, Melvin's asking on the pick of the day, like today, the strike price was lower than what the SPY opened for. Should I change it? No, do not change anything. I mean, oftentimes it'll still probably work, but when you get the code, that is the option that we are looking at trade. So the pick of the day, Aaron and I get together every morning, 8:30, 9 o'clock. We discuss the fundamentals, we discuss the technicals, we discuss where we see the market going and we discuss them until we have some sort of concurrence, and then we say, okay, this is what it's going to be, and here's the option, here's why, and off it goes. Okay, there's a lot of thought and work that goes into this. So we're not just kind of pulling these things out of the air at random. All right, okay. How many days out for expiration do you go? I like to go a few days. I do like to go get some time, even though I am trading. And I'm gonna wrap this up here in a couple of minutes here. Even though I'm looking to get out of the trade the same day, not just the same day, but hopefully in a few minutes, I still like to buy time. Always buy time because you just never know when something horrible is going to happen. You always want to make sure you have time. A lot of times people will say, "Well, how about 0 day expiration, same day expiration?" I say to them, "Well, I get it. The options are cheaper, but there's a reason they're cheaper. It's because there's a lot more risk." And if you look at the volume, you'll see most people do with 0 day expiration. That tells me that most options traders are gamblers, which probably explains why by far 95, 98% of options traders close up their accounts within the first year because they blew up their accounts. So if you want to be a gambler, go for it, trade the same day. But if you're looking to make a long-term successful career out of trading options, you'll want to buy that time. You'll really appreciate not being stressed out when, not if, but when the stock turns against you. All right, because you're always going to be under these emotions. You're going to be afraid when it turns against you. You're going to want to sell real fast. It's turning against me. Oh my gosh, I'm down $500. I better sell. Right. And when it's going your direction, you get greedy. Right. You get greedy. Oh, just another penny, another nickel, another 2 cents, another. If it only goes up another 5 cents, I'm going to cash out. Goes up another 4 cents. You move it up another 5 cents, another 10 cents. The greed, I mean, it just, comes out of you. It just oozes out, right? Um, but okay. All right. Not a problem. Okay. Yes, Charles M. All right. Any issues, please contact. Okay. If you have any administrative issues, actually, I want to tell you this, folks. Um, Administration does the best they can, but sometimes they're either ill-equipped with knowledge or whatever it is, or they didn't get to it. I know that they had an issue there with a third-party outfit with something they had, I think, setting up the phone numbers or something for the cell phones or something. If you ever have any issues at all with administration and you can't seem to get through to them, please email me. Hughg at DayTradeSPY. Email me directly. Let me see if I can help you. But please don't come to me first. Go to customer service. I'm just saying if you have trouble with customer service and you're not getting through for whatever reason, then email me and I'll see if I can pull some strings. I'm usually pretty good about that. Okay. All right, that question here, Howard. Okay, with the pick of the day, let's say the call option is going up and the ask is 250. You're saying that we should buy the open limit order, say at 258. This happens, it could fill the order at the actual time of execution, which is 255. So it's going to be purchased for less than the bid amount. Okay, so what I'm saying here, so the question is, I guess the confusion is, wait a second, you're giving the ask price, which is the high price. You want to buy, so you put it up to buy it at the ask price, right? And let's say the ask price is 250. But by the time your ask price goes into the market, the price of the option has moved up to say 255, right? And now you're on the bottom. Well, you're not going to get filled. So now you see, oh, it's at 255. So then you go back, you cancel and replace, you change it to 255 and they submit it again. Well, now it's 258. Oh my gosh, I can't seem to get ahead of this thing, right? You keep chasing it. Well, you keep chasing it, eventually you're going to find it. It's going to, you're going to get it. But when do you get it? After it's peaked and it's coming back down again. So if you get it, say, for 255 and it went up to 258 and then it came back down to 255, it takes you out of 255. You're getting it on the way down. The next few seconds, you'll see it at 255 and 250, 248, 245, right? It's going the wrong way. So what I'm suggesting is if you see that pressure pushing it up and the ask is 255, put up for try to buy for 258 instead. That puts you at the front of the line. You're at the front of the bus, and you'll probably get it for 258 or 255. You'll get it for the ask price or a better price for you. You might get it for 255 instead of 258, but you'll get it when it's going in the right direction. That's kind of what I'm asking here. All right, another quick question. Cost of the trading room, $6.99 for 3 months. And a lot of questions here. These questions are coming up again here. If I join the trading room, do I also need to subscribe to the pick of the day? Pick of the day is a separate subscription, as is the Day Trade Spy Signal, as is the Inner Circle, as is the trading room. So all 4 of those programs are different subscriptions, but I think if you talk to customer service, they may have a bundle package. I'm not sure. I know there's some people with a lifetime membership and a bundle service, and oh my gosh, they think we walk on water. A little crazy, but anyway. All right. Anyway, I'm going to carry on with that. And let me see what else is going to show up here. Thanks for joining us, ladies and gentlemen, again. All right. If you're new to options, stay with us. We're going to get into the options primer for about 10-15 minutes. Been a pleasure.
And trust the process to keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it. And if you do, then just shout it loud and clear. I wanna know if you really need it. And if you do, then just shout it loud and clear. Loud and clear. Loud and clear. Loud and clear. Shout it loud and clear. Loud and clear. Loud and clear. Loud and clear. Shout it loud and clear.
All right, we're back after that little bit of a break for about 30 seconds or so. Those of you new to options, I still see a lot of people here. Cool. All right, anybody who is new to options, I'm going to give you a little bit of a primer on what options. What are these things anyway? It's some kind of magical, mystical thing that has some mysterious thing all about it. There's nothing mysterious about it when you understand these things. Options are actually contracts. What we're doing is a contract that gives the options holder the right, but not the obligation, to trade the underlying stock for a certain price by a certain date. Don't get confused in the terminology. All you have to understand is that when you get your broker's platform all pulled in, You'll see various tabs up there. One might say stocks or equities. Something else might say forex. Another one might say, I don't know, whatever, whatever futures, right? Futures, another one, and find the tab that says options. That's going to bring up a whole different thing. All right, a lot of option chains, a lot of numbers, columns, rows. It's going to be very overwhelming, very confusing, but it's actually not really. And once you understand it, it's actually quite simple if you take it one at a time. It's going to be split in two sections. On the one side will be calls, the other side will be puts. Again, if you expect the stock to go up, you buy a call option. That's the name of these contracts. If you expect the stock to drop, you buy a put option. Call up, put down. Strike price, they all have strike prices attached to them. These are the set prices at which the stock can be bought or sold when and if the option is exercised. Now, we're not looking to exercise the option. The next person I meet that wants to exercise the option will be the first. Options traders don't want to exercise option unless you really want to buy the stock. But why, we're here to buy the option and trade the option, make money on the option. That's what we're here for. We want the money. I think the days of, getting a stock certificate are over. I think I got a bunch of those somewhere, but pretty meaningless, pretty useless. Yeah, that's not going to get you anything. It's the money that you want, right? Expiration date. Options have a certain time frame with which they are good. If after that they expire, um, can't get any simpler. I mean, you're not in here for long haul. You're in here for a good time, right? Let's make some money. Get on with it. All right, some pros and cons. I'll tell you, there's a lot of pros. I love options trading. It's got lots of flexibility. All right, with options, you can do a lot of different things. Very cost efficient. Very huge. The huge leverage is what makes options very attractive. The stock does not have to move a lot to make some very serious money on the option. Um, in fact, if the stock moves very little, you can actually make a lot of money on the option. This is how, and when you hear options traders, oh my gosh, I made 100% today, or I made, 60% yesterday or something, they're probably telling you the truth. They could be in one trade that took them up to that 60 or 80 or 100% or 120%, or they could have had multiple trades because you get multiple opportunities during the day to make money. I've got one gentleman, Dennis, he's a retired gastroenterologist. Hard to say that word, isn't it? I said to him, really super nice guy. He's from Utah. I haven't talked to Dennis in a while, but I remember he said to me, if I'd have known about options trading before I went to medical school, no way I would have gone through to become a doctor. This is a specialist talking. You can be sure he's done well. I said to him, Dennis, there's no money in the world that would make me do what you did for even 5 minutes. You know, imagine going to work every day in this gastroenterology. You know what they do? Look it up. I don't have to end it. Anyway, he loves it, and he goes in and out every day, many times, and it's not unusual for dentists to bring back, 80, 100, 120, 130% a day return on investment. I think a slow day for him would be probably about 20, 30%. So yes, it's possible and very probable that people are doing those kinds of gains. The return is potential. The potential return is very high, and I mean, I just absolutely love it. Many strategies available. I'll be honest, our strategy is not the be all and end all. It's not the only thing. There's many strategies. This is the strategy that works for me. I've tried many other strategies. They did not work for me. But when I found something that worked, I stayed with it, right? And these people that keep changing and looking for new things, they will never make money because they're always looking for something new, and they're not giving it the time and effort and the commitment to learn a particular strategy that's going to do them well. I think the idea is you have to find a strategy that fits your style, your schedule, your goals, all this, and then tweak it as necessary. Okay, tweak it as you need to. You know, it's not a one size fits all. So you're going to want to be able to make adjustments to your strategies. Excuse me. Very fun, exciting trading, like I mentioned. There are some cons. There's a time delay with options. The commissions, these are real, and they can be risky, right? Options trading is risky business. They're not, you're not, nobody's going to tell you, oh, hey, Fred, you better get out of that because you're in trouble. You are your own person. Folks, we day trade options only on SPY, period. That's what we do. SPY follows the top 500 stocks, highest traded stock. It's affordable, it's liquid, it's exciting trading, huge profit potential. I cannot imagine any other stock that I wouldn't want to trade. Over the years, all right, we learned what works and what doesn't work in both trading and training. And we basically look for one stock, one strategy, 1 hour a day. SPY, why now? SPY follows the top 500 stocks, efficient use of analysis time. Before this, I used to be with another group, and we used to have to get together every Sunday night and every, I don't know, Tuesday and Thursday and all day, Monday to Friday, 9 to 4. And I think, another day or two. But we were totally consumed with looking at our stocks. We always had a group of stocks that we're looking at, our stocks and our sectors and our this and our that. And not with SPY, you don't need to do that. You get in front of your computer at about 8:30 in the morning, check the news, check the fundamentals, check the technicals, check the charts, see what's going on. And now, by the time 9:30 rolls around, you get a pretty good idea what's going to happen today in the market. How cool is that? You've regained your time, you've simplified your life, you've made a really, really cool strategy that works very well. Efficient use of your time analysis, your analysis time. Moves are quick. All right. Some of these moves, they happen in seconds. You want to get your gains faster. SPY, I find to be fairly reliable, consistent, predictive, even forgiving. Very often you can get in a bad trade, but you know what? Just stick around for a little while. You'll probably see a change. Obviously, you want to make sure the disclaimer is that you read that when I say these comments here. But I like SPY because it can be anticipated in any market. You can make money both going up or down. So if you see a down market, you can still make money on SPY. How cool is that? Can't do that with a mutual fund. Put your money in some of these some of these mutual funds or whatever. They don't make money. They can only make money going to the upside, right? Folks, why not? Learn something new. Stay mentally sharp. Do you know that there are people, we talk to people regularly who are in their 80s, day trading SPY, and I would never know it. They're mentally sharp as anything. And they're spot on. So I think this keeps you young, keeps you sharp, and um, it's a really good thing for your brain. Earn while you learn. Time's going to go by anyway. Might as well have some money on it, right? Huge profit potential for serious traders. You can truly achieve that dream lifestyle. And some people have some pretty lofty dreams, and I love to hear those success stories when they come back to me and say, "Oh my gosh, I bought that motorhome I've been trying to get for the last 20 years, and in about 3 months I was able to buy it based on what I did here with you." So that's pretty exciting to hear that. Exciting, thrilling to beat the market, right? Everybody wants to beat the market. And here's the cool thing about it: you can actually pass this knowledge on to your kids. Financial security. There's no financial security in anything anymore, or a job, or any of these things. But when you know how to trade, right, and you as a parent or grandparent, when you train your kids how to do this, it's pretty cool. It's very liberating, very comforting, knowing that they have the potential to be okay. What they do with it, that's up to them. You can give people the tools, whether they use them or not. That's ultimately up to them. But at least they know, right? They know, and if they want to explore it further, they can. So sometimes people ask me, well, what's the difference? I'm not sure. Stocks, options. So let's say you want to buy stock. Let's say you want to buy 100 shares of SPY. It's going to cost you, say, $450 a share. You're going to be investing $45,000 into that trade. A lot of people don't have that much money, or if they do, they don't want to necessarily put that whole thing in one single trade. But if you were to buy one single contract of SPY uh, options, you're actually controlling the same 100 shares. And let's say that option is $3, well, you're going to spend $300 versus 45,000. Now, let's say the stock rises a buck. Well, your stock value is now worth $45,100. But if the stock was up a dollar, there's this thing called the delta, which is the relationship between the option and the underlying stock. So if the delta is 50, that means your option goes up $50. So don't get bummed out on that, because take a look at the comparison. $350 versus $300 versus $45,100 into $45,000. Here is the excuse me, return on investment. 0.222% with the stock versus a whopping 17% on the option. This happens all the time. This isn't a one-off or a cherry picking and, oh yeah, what happened once last month or something. This happens every day. We see this all the time. That is the beauty of it. Folks, which would you rather have? I'll be frank with you. Ever since I discovered this amazing power of options, I never went back to trading stocks ever again. Not to mention the fact that I'm limiting risk. Let's say 2008, 2009, you were in the stock market. You may have lost a lot of money. Those stocks did not necessarily pan out for you. Folks, take a look at this. One stock, one strategy, 1 hour a day. Learn from our mistakes. You're not going to live long enough to make them all yourself. All right, you're just not. You're just not going to learn. You're gonna want to, you're gonna want to hook up with a mentor, a coach who knows how to make this stuff work, right? And get good, get good with them, right? And learn all you can and work with them, and you're gonna be all right. Folks, remember, if you want what I have, you got to do what I do. Been a real pleasure. Hope to see you online.
You're